Jacob here with the Traders Club. Welcome to the market update. I hope you guys are enjoying your weekend thus far. Today I have a couple slides to look at things long term, and we'll go back to my chart, and I want to talk about what happened this week, especially what happened on Thursday and Friday. We did open a gap on Friday, and that gap was very important because we opened a down gap on Thursday, and that gap was closed, and we thrived above it. So we're going to talk about that towards the end of this video. But first, I have two slides here that I want to talk about on the S&P long-term chart here, on the weekly chart, and the Qs on the monthly. And we'll kind of explain what's going on in the long term. We'll talk about the, some of the levels here, and then we'll go from there, and then we'll talk about the kind of a minor term implication and expectation for the coming week. So looking at Spider here, this is S&P 500 ETF Spider weekly chart going on to about 2010 till today, 2019 here. And as you can see, this moving average is coming down to going up here. This is a 200-week moving average, right? And basically, this moving average is looking at things a major primary term here. Obviously, looking at this bullish run that we've been in since 2009. And the downside in this oscillator, especially reconfigured oscillator, kind of gives you certain levels of extreme oversold and extreme overbought levels. And also, you can have to see when the market get into an uptrend, and then when the market comes down to retest the 200-week moving average, coinciding with when the oscillator is telling us that is the extreme oversold level, which I've annotated with red arrows, you can see. So let me just dissect it here a little bit. Here you can see we saw about 20% corrections in 2011, and that's when we was retesting that moving average here, and that was coinciding with the oscillator hitting the extreme low. We got the move higher, and we pull back, and to me, it is pretty surprising for me to see that this oscillator came all the way down to the lows. This would have been a really, really good buying opportunity. And obviously, it's never that easy. It's always easy to see and say, well, it would have been such a good opportunity here. Well, it would have been such a good opportunity here. Well, it would have been such a good opportunity here. But when you're actually going through it, it is actually not that easy because, well, you think that there's a much, much deeper correction coming. But I think if you just look at this here, we already saw the 20% correction, made a new and made a higher high here, and on this pullback when it retested the extreme low here, that would have been definitely a very, very good buying opportunity to make this run. Even if you bought it there, and a lot of people get scared out before you get a real move. You see, they get scared out after a couple days or weeks of move, and then when you see a little bit of correction right here, a lot of people get closed out their position and miss out on an entire move. So and then they always, scalp it here and there. But if you really want to grow your portfolio and just really increase that performance-wise in the long term, then you really want to catch a big move here, like these kind of moves that comes, every 3-5 years or so. But anyway, so looking at this here on the entirety, you can see that this is definitely a level that I to be honest with you guys, and I'm always upfront with you guys, right? And I did not see this coming all the way down. I really didn't see this thing going to see about 20% correction. I think the worst case scenario, I thought maybe 8 to 12% at most. And but I didn't see 20% correction coming. But sometimes these things do happen. Sometimes you do have to go through certain things. I mean, like some of these very, very short-term trades acting like they want to correct everything. They're going to time everything. Trust me, these people never ever make money in a consistent basis because they always want to time everything. You cannot time everything in the market. Tell me anybody, any human being, or any even computer at this point can have to time the time. If you expect me to time everything, well, thank you for calling me God. Then I'll buy it here, close out there, 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 buy it here. You see, nobody can do that. This is one of the main reasons why so many people are either short term or day trading, or they're always scared. You know what I mean? Sometimes you're gonna have to go through some shenanigans. Sometimes some unforeseen circumstances are gonna arrive in your life, just like your life, right? Sometimes you cannot avoid every trouble. It is part of life. It is a part of investing in the market. I do my best to avoid every possible pullbacks. I mean, I was able to avoid this pullback right here, as you guys know, and I was able to ride from here to there, and then I also rolled that, but I did not see this one coming. But good news is that I was able to accumulate more positions and accumulate more long positions throughout this pullback here, and I think we are getting near to its lows. We're getting near, and we're getting at the level of a bottoming level. And I've done this major primary long-term analysis on the 2 weeks ago video, right? You guys seen that video? If you haven't, I'll put that video after this video. The 15-year bullish run. Obviously, when I say the 15-year bullish run, doesn't mean the market is gonna go straight up every single day for the 15 years. Market is gonna have its ups and downs. Market is going to have its corrections. What I mean is that we're not gonna get in a bear market. Keep in mind, bear market usually lasts about a year, and I really defined what bear market is on that last video, right? The video that I've done 2 weeks ago. So make sure and watch it, understand what the bear market is. This is not a bear market. This is not a bear market. This is not a bear market. That's a correction within a primary term uptrend. And somebody like me, you know, who's able to participate in a move like that all the way through, you know, this is something that I can able to have some kind of cushion to go through it, maybe buy some more, make into a more opportunity, and then I think this year in 2019 is going to be huge. I talked about it in a recent article, that blog post that I wrote, which I'm going to talk about in a little bit, the NASDAQ chart, but I think we're going to do, minimum 25% to possibly 35% on the S&P this year. You know what I mean? I think we're gonna have a great year. We're gonna have a huge year. So we'll position ourselves accordingly. And I don't think the crash is gonna come. I think this is the bottom here, or nearing bottom. Obviously, nobody can able to, completely pinpoint where the bottom is. Nobody can do that. But I think this is a level that we potentially could be seeing possibly V-shaped reversal here. So looking at the weekly chart, we did have a follow through. This definitely was a bullish piercing pattern last week. As you can see, this was prior week's candle, the long bearish candle, as you can see right there. And then the prior week, what happened was it pierced 50% of its body. You see that's where it pierced. That's what they call bullish piercing candle, right? So that's what that was. And then we saw a follow through today. And a lot of times when you see this weekly bullish follow through after the oscillator hitting the extreme low, and we're seeing the long-term primary term uptrend moving average getting retested, and then we're obviously extremely over. So and you're seeing the bullish piercing candle and then a follow through. I usually expect about 1 to 2, maybe 3 weeks of follow through move to the upside. Doesn't mean it's gonna go straight up. It's gonna have an intraday volatility. It's gonna have a volatility throughout the day in the week, because obviously even if you look at this candle there, you can see that there's a lower wick that tells us that this week this thing was as down as much as that week is showing, and then towards the end of this week it brought it back up here. So I think there's gonna be follow through next week, next couple weeks, and obviously we're gonna continue to follow up on this on a weekly basis on these market update videos, so you guys can tune in on a weekly basis, and I'll follow up with you guys on these charts, especially on this weekly chart and the follow throughs, and we'll go from there. Obviously, this is in a level that we saw good buying pressure in the past, have a pretty good resume happening in late 2011, 2016, and then here we are in early 2019. And 2 days ago or so, when was it? January 2nd, that's three days ago. You know, you guys can just probably Google it or go to twotradersclub.com, and 2019 is going to be huge. And this chart right here, let's talk about that. Obviously, this chart was screened a couple days ago, so today is going to be a little bit higher, but the implication is same today. We have 20-year base on the NASDAQ. I want you to see this in perspective, okay? From here to here, NASDAQ is up only 20%. In 20 years, excuse me, NASDAQ is up 20%, right? And you're gonna say, well, okay, well, if you measure it from here and here, we're in a big bubble, okay? We're in a big bubble. Really? You guys all fear 1987 Black Monday, correct? You guys all know that 1987, we had this horrendous 40% or 50% crash in just 3 months, right? If you bought NASDAQ, okay, and I proved this, I think I proved this on the video 2 weeks ago, right? If you bought NASDAQ just the day before 1987 Black Monday, let's just say this is 1987 Black Monday, you bought it just the day before it, and you held it 13 years, guess how much the NASDAQ was up? 1,000%. 1,000%. But if you bought it here and you held it 20 years, you're up 20%. Are you telling me they were a bubble? If the market goes up 1,000% in 13 years, that's a bubble. Market goes up 20% 20 years, we got a lot more to go. We are nowhere near a bubble. We just came out of this 20-year base. This, ladies and gentlemen, was a recovery phase, right? Just like when we get injured, right? We need to stay in a hospital, right? Before we can run again, right? We need that recovery phase. The market took about, let's just say about 17 years or so to recover, right? 17, 20 years or so to recover, and it's starting to run again in maybe about 2016 and 17. So this bull market is only about 2 years old. We're not in a 10-year bull market. We're about a 2 years old bull market that could last 10 to 15, even possibly 20 years. But we're getting too ahead of ourselves. Let's check this monthly chart here. This is what I call rising pivot, prior resistance, potentially new support. This right there as well, this is what you call uptrend support. Just connecting the dots, right? Your 2-year-old, maybe your, I don't know, 2-year-old, can they do that? I don't have kids, so I don't know if 2-year-old can. And I'm an only child, so please don't. I'm an only child, so I don't know if 2-year-old can able to connect the dots. But I don't know if I was able to do it. But kindergarten can do it, right? Connect the dots, and that was exactly what 2016 was. And if you go back and watch my 2016 video, right, 5 reasons why stock market crashed not, right, that video, I just connected the dots. I said, well, we connected these dots and then we're just right here. Same thing was in 2000 in this chart. Well, you can't really see it here, but if you go to S&P 500, same thing, I did that there, just connected dots, right? So that's kind of what you do, is connect the dots from the lows of 2016 or 2015 here. We got that uptrend support here and here. And here we're just that level. And then we kind of did that also. That's rising pivot, prior resistance becoming new support. A lot of times when the stock or indices break out of this channel type of move, what it likes to do, it likes to kind of retest the level before going higher. And that's exactly what happened on the Dow back in 2016. If you go check my video, 2016 video, Dow historical breakout, new secular bull market ahead. If you go watch that video, I demonstrate that. We have a very, very similar pattern happening on the NASDAQ here, similar to on the Dow in 2016. Prior resistance becoming new support, and then just simply connecting the dots, rising uptrend support. Again, Market is not a excuse me, it's not a certainty game, it's a probability game. We have a high probability this becoming a major bottom before we see another swift move here. Last time we saw about 20% correction on the NASDAQ. We saw that kind of move, and after this decline, I am expecting big move here. Doesn't mean it's going to go straight up every single day. It's going to have its ups and downs. It's going to go through some corrections along the way. We're not going to see 20% corrections for a while, but we may see 5%, potentially 8% corrections here and there, some shenanigan along the way. But if you stick with the long term, I think the market is going to do really well here. So I think this we are dealing with this major bottoming level. And obviously, nobody can truly pinpoint exactly down to the cent where the bottom is. I don't know where the bottom is. I mean, the worst case scenario, we may even come back down, retest lows, maybe do a little double bottom before going higher. Nobody knows it. But here, I do want to do a short-term analysis for you guys before I let you guys go. Again, this is what I'm talking about. 2016. What did I do in 2016 on my video? Connected the dots. Trend is assumed to be in effect until it gives us a clear signal that it has been reversed. Well, you know what? We're just going to connect the dots once again, and we're just right at that level. And we can also look at this one as a rising pivot type of move here, right? This is a prior resistance here and here, and then coinciding with that level. And we also just talked about we're being at an extremely oversold level. So this is the level. We have a high probability of this level being the bottom here. Again, this does not mean, I'm gonna move this a little bit here. There. So this does not mean, right, it's gonna go straight up from here. Nobody knows. But here, I got a thesis here. I want to share something with you guys on this chart and let you guys go. We have this gap, right? And this gap is very, very important because the nature of this gap right here, right? So if I'm going to zoom in, we're going to talk about it and let you guys go with this. Before this gap happened, we actually hit this downside gap. Let's actually go do this, right? So you did this. This was Thursday, right? This was Thursday. So what happened was, on Thursday, we had this downside gap down, right? And this was after the news hit about Apple, right? Their sales number, and Tim Cook announced something like that. I'm still bullish on Apple, by the way. I think this is an exhaustion gap, and I think the gap is gonna get filled pretty quickly here. But anyway, so we saw that, and then that dragged the market down with that news, right? That dragged the market down. We saw a gap down, and then we ended the day on Thursday about 2% down or 3% down or something like that. I think it was a 2.5 or 2%. I'm not sure, but it's 2% down day. You know what? I'm gonna measure that. I'm gonna measure it. 2.7% precisely. 2.7% down on Thursday, and we opened this gap, right? We opened this gap, and this was gonna make things very, very hectic for the short-term buyers, because now we opened the gap down. Not only that, we saw follow-through down day, right? Not to mention, obviously, we are bearish in the minor term and intermediate term. We are looking at things in a shorter term. We are in a downtrend. When I say we're not in a bear market, we're not in a downtrend in a major primary term, which I've demonstrated in a previous charts, and then the video I've done 2 weeks ago. But obviously, we're in a downtrend in the short to medium term, right? So, I mean, this thing was going to make things very hectic, and I thought, you know what, maybe there's a possibility we could potentially come back down, retest the lows, right? Unless there's some kind of shenanigan, right? And this was Friday. So here's what happened. A lot of times when the gap, is open like that, what happens is, even though we saw shenanigan gap up, if this thing, a lot of times we gap up, it goes up and fill this gap here, and then it usually gets sold. A lot of times when the gap gets filled, it acts as instant resistance, right? We talked about that before. So a lot of times what happens is this thing goes up, fills the gap, and then sellers rush in, and then a lot of times you get something like this, right? I mean, I'm just talking about usual circumstances, right? So then you get something like that, like some kind of shooting star type of candle, right? And after filling this gap. And then next day, you know, this thing come and fill the gap or do something like this or do that. Or if we gap down, just makes it worse. I mean, that's what you typically see when you see back-to-back gaps. I mean, you could also see this candle and the next day you see like maybe a bullish candle like this and then start to gap back up, or this thing coming down. It gets, again, when there's a gap action like that back to back, it gets pretty hectic, it gets pretty wild, and there are a lot of shenanigans. But it pretty much what happened, this is going to favor the short-term buyers, is that it was a very, very strong bullish move, and it's very rare to see. We push through. And keep in mind, we are in a downtrend. We're not in a bear market. We're in a downtrend. We're in a downtrend, the mid to short term, right? Medium to short term. We're not in a bear market or downtrend in long term. We're in a bull market in a primary term, right? But in a short to mid term, we're in a downtrend. So in a downtrend and extreme fear level, we see a candle like this getting above this gap. Not only that, it's thrusted higher, and this gap is still open. So what I'm proposing here today, I think this is a very, very bullish action. And if we can able to hold this gap, keep this gap open, even if this gap gets filled, I think it's low probability. I think this gap is going to hold. But the gap that we see today, 247 and 244, it's gonna provide great cushion. If we do see come back down, filling this gap, or even retest this gap, that's going to provide a good cushion. If this thing come and fill this gap, it's going to provide a good cushion. But because we push right through this downside gap right here, right? This down right here, I think there's a good chance that this could continue higher, and we may see a V-shaped move higher back to next gap we have is this level, right? This level. That's what we got. That's a tiny gap though. But that's a congestion zone, about 260 and 280. So there's a good chance we're just going to get up here. And to make things even better for the bulls, we just gap this up, made it into an island, and continue higher. We potentially see a V-shape higher. And here, I'm going to give you another thing. If you're going to see unthinkable, like miracle bullish run, this could see a V-shape higher all the way to, 280, potentially even 290s. Doesn't mean it's gonna go like straight up. It's gonna have some kind of minor pullbacks like this where it goes up, do a little bull flag, goes up, do a little shenanigan up and down, goes up like that. But then if you look at things, more of a intermediate term, minor to intermediate term, this thing goes straight up like that. Instead of seeing like this thing going up, pulling back, going up, pulling back. You know what I'm saying? Do you understand what I'm saying? Instead of seeing this big pullbacks, we could see going up, do a little bull flag, go up, little shenanigan, go up, little shenanigan, go up. Do you see what I'm saying? That could be what's brewing, okay? Again, this is not a certainty game. This is a probability game. I think that there's a good chance we can see something like that if we've already made so much momentum here. And this gap move, that kind of, you start to feel like what bull market really is. You start to feel what it was like. You really felt on Friday what it's like to be in a bullish run, and so I feel like this was a good confidence move on Friday. Let's see if we can see a follow through. We are just right on the 20 MA here, and last time 20 MA was difficult. We did act as resistance here, so we'll see. But I think there's a good chance we'll get up here at 260. There's a good chance we get up to 260 next week. Possibly fill this gap, possibly gapping it up. That would be the best case scenario. Getting up here, gap it up, and then continue higher to about 280. I mean, that will be best case scenario, just V-shaping. Another scenario might be that we come here and we start to stall. We fill this gap, we meet with the 50 MA, and then we pull back and then go higher. The worst case scenario, this thing come all the way back down the gap. But again, let's not get too ahead of ourselves. We'll follow up on this next week. We'll look at the weekly chart next weekend, and then we'll look at some of these levels, and we'll talk about potentially that V-shaped reversal that I'm just talking about today is going to play out or not. So we'll talk next week. We'll go from there. You guys enjoy your weekend, and good luck trading next week.